Hello everyone, it is Evan from the Trade Risk on Sunday, September 20th, here with some weekend analysis. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then finally some trade ideas for the week. Now before we get started, I want to remind everyone that's fast approaching is a trading webinar that I'm hosting this Wednesday at 7:30 Eastern. If you head to thetraderisk.com/webinar, you can sign up, drop your email here, or just head to thetraderisk.com. Click on this link on the top right hand corner. It'll bring you to this page. It's going to be about an hour long. I'm going to give you some insight as to how I trade, how I analyze price action, how I position size, how I navigate volatile markets as a swing trader, and how I adjust my trade expectations. Should be a lot of fun. Bring some questions. Be about an hour long this Wednesday. Excuse me. traderisk.com/webinar. I hope to see you guys there. Should be a fun time. Now, getting into the markets this week. It was a busy week. We had macroeconomic data out, we had the Fed out, and we had markets moving all around and just sort of reacting to the data that was coming out. Now, before we look too closely at the SPY chart, I want to remind everyone that it did go ex-dividend on Friday. That means that this chart is skewed a little bit more to the downside because of that dividend. It's about a little over $1. So this chart looks a little more pessimistic than it otherwise should. So let's take a look at the cash market, the SPX right here. And you can see this is sort of the scenario that we're in right now. And again, our goal is to just as objectively as possible analyze markets. And if I were to look at this chart, any chart, if I just had this name hidden and someone showed me this chart, this is bearish formation. Now, I'm not making a bearish call. I'm not predicting that things are bad, but here's basically what happened. We had to recap. We had this nice, clean, orderly sideways range that this market was trading in for several months. We had a sharp breakdown, and now we are building up here in sort of this bear flag formation. I'm calling this an ascending triangle with this flat top. Some people are calling it a rising wedge. Doesn't matter, however you want to draw the lines. The point is we had a strong impulse leg to the downside after we broke through support, and now we crawled up for the past couple of weeks to about the 50 to 60% retrace. And now, with the way we ended last week, we are back here at the lower end of this rising trend line. So the question becomes, do we hold this or do we see a break and potential sharp move down, a second leg lower, a retest of these lows? That's all basically what we're looking at. So again, I don't think we can lean too much one way or the other. I definitely think that the bears have the ball here, just given the reaction off of basically Thursday and into Friday, and we're going to talk about that a little bit more. So let's actually stick with the SPX, the cash market here, because it does more cleanly show what's been going on here. But basically, and you know, we did have the catalyst of the Fed out on Thursday, but this was Thursday's bar here, and you can see how much we did initially start to climb above what this 1995, 2000 level right here. This is a big level, and again, it goes back all the way to here earlier this year where it held as support. So this was definitely a very big level of interest. It was also the immediate highs that we made with our 3-day bounce following the sharp leg lower right into this 1995, 1990 level. So that was definitely a level we wanted to see the market get back above if we were to start getting more constructive. And what we saw instead was a sharp move lower off of that level. So what happened was Wednesday we traded into it, we closed above it, looked constructive. Thursday we traded all the way back up but couldn't quite close above it. We couldn't get above Wednesday's high, and the market closed slightly red on the day, and then Friday followed through to the downside. So brought us back to the trend line. It's still a bit of a holding pattern, but you would have to say that this sharp, fast reversal off of this area of interest right here at 1995 is a bearish scenario. It's a bearish outcome. We couldn't hold up here. We couldn't, just barely get another close right around 1995, showing that we're pent up. We did sharply sort of reject that level, and we're back down. Now, the question becomes, can the bulls play some defense here and support these prior price levels? Let's go back to the SPY chart. You can see it doesn't look as clean here, but of interest now is this smaller level down here at 194, 30, 194 and a quarter, however you want to paint it. We had a lot of lows in here. We had a gap here. This is going to be an interesting level to see if the bulls can step in and prevent further washout to the downside. And then, of course, you got this level down here right around 191, which is where we found some support for 2 days or so. And then you have the risk all the way back down here, down to 182. So those are the downside levels we're looking at. On the upside, we're basically looking to retake 199, get back above 200. That would start to make this chart look a lot more constructive. But for now, I think you need to be still need to be defensive. I think, again, just look at this and take a look at this chart, hide the name, and if you were to look at this chart, if someone asked you to analyze this chart, you'd have to say that this is in bearish formation with this breakdown, rising wedge, ascending triangle, whatever you want to call it. This does not look healthy. It can turn to be a healthier chart, but right now I just don't see it from the technical picture. So I'm still staying defensive. I'm actually we are short we are long SPXU, which is the triple inverse to the SPY to the S&P 500. We do have some long positions on as well, but right now we are short the S&P 500 for a trade. Now let's look at some other markets. IWM. Similar situation here, down 1.38% on Friday. We saw this sort of follow through to the downside off of yesterday's topping tail, Thursday's topping tail after the Fed announcement. This one is still kind of holding up here. The small cap index, it hasn't quite snapped this trend line, or it's not quite at it. But again, still has a pretty sharp trend line that it's been moving up on for the past couple of weeks. If we look at the Qs, similar situation here. Looks like it is trying to now break this rising trend line that it's been in. And also on Friday's action, it's taking out a few days prior lows. So again, it's still a tough environment. I think there's something for both the bulls and the bears. There's opportunity. The market's faster. So you just need to adjust the trade expectations and kind of adjust accordingly. Now let's look at some other markets. TLT is the first, and this one had a nice rally this week. If you look at it, up 0.58%. It held in there, right? Not a super explosive move, but look at where it was earlier this week, all the way back down here at 117. Look at last week's tail down here. Look at the week before its tail down here. So you can see that there's some interested buyers as price starts to get below 120 or near 120. You're seeing some dip buyers come in here. That's very constructive, especially after this big bearish engulfing week that it put in about a month ago. So this does look constructive here. It needs to clear a little bit more, get above this 123 zone, and all of a sudden I think this looks a lot more bullish, that the bulls did prove themselves buying this dip. So we're not quite there yet, but I think there is some constructive bullish action in TLT. USO, talking about this one for a while. I am still long this market. It was a horrible session on Friday, down 4%, but couldn't quite take out my stop. Again, we're still in this trade. We are getting close to being stopped out, but I really want to see, below $14 or so get taken out, $14.5, $14.10, something like that, and I will be out of this trade. I'm still keying off of the weekly chart here. Look at this nice bullish engulfing bar. We're still holding, even though there's been a lot of chop in here. Look at these topping tails, definitely painting a little bit of a pessimistic picture there, but if you look at the bigger picture here, we are still holding the top 70% of this big bullish engulfing bar. Doesn't say, it's nothing guaranteed. It's just what I'm keying off of right now. So I'm still long this market. Even though Friday was down 4% on the day, it basically closed flat on the week. So not much, a lot of movement, but basically when everything was said and done, USO was back to where it was. So I'm still long this market for now. A gap lower Monday, and I'd probably be taken out. Let's see what happens with that one. UNG, talked about this this big support level that price couldn't seem to quite get away from it, especially after this reversal move lower here into Wednesday and then Thursday. I am short UNG. It's pretty clear why. It's basically multi-month support, and we're finally seeing a break below it. Again, my stop is in place, and it's just a trade. This is still a pretty high stakes area. I would still think that we're either going to see a quick move lower from here, or it's going to be another one of these fake outs, and we're going to come in gapping up 3% and I'm going to be stopped out or whatever the case is. But it's a pretty interesting level down here. It's a new all-time closing, new 52-week closing low in UNG. So let's see how that one progresses as well. Now, if we look at the metals, gold and silver, they had a nice session on Friday. The week, they turned up pretty nice, up 3% for gold. You can see it put in a potential higher low here. So we had a nice impulse leg up, came back down, couldn't quite make it to the lows. Bulls are trying to push it back to resistance. That is constructive. Again, longer term, it's a messy chart, but is seeing some constructive action there. Silver, similar situation, heading back to the top end of this range. Really needs to take out this 1480 or so zone, and I think that one would be more on its way. Now, if we look at some sectors here, IYR and the XLU, the rate-sensitive sectors, these are still holding up best relative to the others. If you look here, we are holding basically the lows from July. We're in this range. Now, these have been beaten up maybe more so than the other ones given the start of this year, but we are still trying to trade in these longer-term ranges here in IYR and XLU, trying to hold in there. Better than the others. Now, on the other side of things, on the bearish side of things, most look pretty similar. Most of these sectors are in pretty similar formations. The only one I would probably point out is one of the weakest ones is the financial sector, is the XLF, because take a look at where price is relative to the recent lows. It's basically at the lows again. It's basically at the lows from a few weeks. Again, if you look at the SPX, take a look at where we are. We're still up here at the top, 30% of this trend higher. And then you take a look at the XLF. This recent range was much more flat-based in nature, and we're already back at the lower bounds. A little more bearish here in the financial sector. So you got to keep an eye on that. Maybe some good shorting opportunities if this market does continue to roll over. Now, if we look at some other individual names, let's look at Google first. This one failed here at this level of interest here, right around 672 or so. Saw some follow through to the downside. It's caught into this range here, still messy, but holding up pretty well, all things considered. So still not ready for a trade setup here for me, but I'm watching it. Google does look a little constructive there. Netflix is pretty much in no man's land here. It's got a really wide risk range, all the way back from $94, $95 down here at these lows, all the way up to 116 or so. So pretty wide range. Needs to just kind of figure it out. It's volatile right now. Nothing too interesting for me there. Amazon, definitely one of the best looking names here, probably across markets, but mostly in this tech space. Closed strong. Even on Friday, it managed to hold up, closed up 2% this week, so it outperformed very nicely. Basically, just couldn't, not quite, but actually, this is a new closing high. This is an all-time closing high in Amazon on Friday, so that is very constructive. You look at a weekly chart, again, we've never seen a close above it. A lot of topping tails around here. I think this one looks good. This is definitely where you'd want to focus and see if this one can continue. Facebook, similar situation to Amazon's trying to grind higher, closed flat on Friday, which was constructive. And this one's contending with this $95 level in here. So certainly some constructive action out of there. Twitter, similar situation. This whole space here does have a little bit of a bullish bias here in this high-tech space, or even the cloud space, however you want to branch some of these out to. But the Twitter looking pretty good here. Get back above $28, $29, I think. Get another pop there, momentum squeeze into maybe the 30s. See if that can happen. Alibaba, this one showing signs that this is going to be, or it wants to be, some type of short-term at least bottom. A lot of very large expansion bars, but you're seeing a lot of nice green bars come in. You're seeing buyers step in here at these lower $60 levels. This looks early stages constructive on what you want to see for a potential short-term bottom to be put in. Definitely has its work cut out for it. It's not going to be an easy ride higher, but I think there is signs here that the buyers are trying to take control here. So Alibaba, that one looks constructive. We'll look at GoPro next. This one had a nice 3 or 4 day bounce, but again, it's down 50% in 30 trading days, so this one's still very much beaten up, down 3% on Friday. Closed off of the lows, which is constructive. Again, you could see further squeeze here, but technically this one's still pretty damaged. And then finally, Tesla, sort of in no man's land too. It's in a pretty wide range. Look at a weekly picture. I think this is sort of what we're looking at here. We're in just a long sideways range. Might need a lot more time to just fill itself out, but basically, you know, 280 or so are the all-time highs. That's the target the bulls need to get back above, but it could mean just a few more weeks or many weeks of just kind of slogging around up here. So don't see anything too actionable right now in Tesla, but it is definitely some constructive action. Now let's look at some trade ideas into the week. Start with HSY. This is Hershey Company. I think we talked about this one last week. This one's still looking good. Again, it came off a little bit between Thursday and Friday, but if you look at a weekly chart, you can see it's been in a downtrend for basically all of 2015. Moving averages starting to curl over. You're starting to see some a little bit of a bid come in here, so keep an eye on this one. I think it's battling in this zone right now. Could start to look pretty good there in Hershey. IQNT is another one. I don't know, I gotta do a little research on this name though. This looks very clean and orderly. I don't know if it's a low volume. Shouldn't be that low volume, but just want to make sure there's no merger or anything, acquisition in here, that a price is really cleanly trading at, because I get a little hesitant when I see such tight perfected price action there. But IQNT, take a look at this one. May need to research it a little bit, but hanging pretty high and tight right there. Take a look at a weekly chart. Looks pretty constructive. It's been an uptrend for a little while, so keep that one on watch. Next is HUM, H-U-M. Look at a weekly chart again. You can see traded off a little bit. Flat base, moving averages starting to curl over. It needs a close above 190 to really set this one in motion. You can see what we're looking at here on a daily time frame. Does look pretty constructive though. I'd look to see if that one can continue further. Price line, we talked about this one, 1300. If you look at a weekly chart, again, you can see the base that it's been putting in now for 2 years. I think getting a close above 1300 could start to set this one in motion again, but it couldn't quite get it this week, even though it closed slightly up, which was nice outperformance, but we couldn't just get that close a little bit stronger. Then finally, ENR. This one's a recent IPO. Take a look at a daily chart. You can see here that we get a nice flat base right here. Price was looking constructive on Friday, but it couldn't hold it in there. Need a close above $42, get a new all-time closing high. I think this one start to look good, but for now we're just on watch with ENR. And that is all I have for today. That's all I have for setups. Hope you enjoyed the video. Again, traderisk.com/webinar. It's happening this Wednesday. Hope to see you guys there. And as always, thanks for watching. I will catch you next time.